Koto Katoa, warm welcome in the New Zealand Pakistan Research Forum webinar series. I'm Imran Muhammad. I'm an associate professor at Massey University. The forum was established in 2019, and this forum provides an opportunity, a networking opportunity for Pakistani origin and Pakistani related researchers to achieve the highest level of a research excellence. And let's talk about a little bit about today's webinar. The main aim of this webinar series is to discuss and showcase the research and policy expertise actually we have in our members. As most of you know, today's session is about the economic challenges and opportunities in post-COVID world. We will discuss about the property market, stock market, and intergenerational sustainability, which is really, really important on this time of of the history, in fact, okay? It is my pleasure to welcome three distinguished speakers today: Dr. Arshad Javed from Massey University, Dr. Tahir Suleman from Otago University, and Dr. Mubashir Qasim from Waikato University and Livestock Improvement Corporation. Each speaker will talk about their research in general and then challenges and opportunities in post-COVID world in particular, okay? And here, just want to say that the participants, they can write their question, comments in a chat box, and after their presentation of all three speakers, they will get an opportunity actually as well to speak and to share their view, or at least they ask a question, okay? So let's start with the first speaker, Dr. Arshad Javed. And Dr. Arshad Javed is a senior lecturer at the School of Economics and Finance, Massey University. And prior joining to Massey University, he worked at the University of Hong Kong and Hong Kong Polytechnic University. So Arshad, I'm going to hand over to you. Now you can, talk about your research. Arshad, I can't hear you.
Sorry. Kia ora. Good afternoon, everyone. Thanks a lot, Dr. Imran, for inviting me to be part of this New Zealand Pakistan Research Forum. So it's been more than 18 months. We went to Pakistan High Commission, and we try to set up and try to engage all these Pakistani researchers here in New Zealand. So it's a kind of a great initiative again to just start this kind of webinar again. So I will be just in the first 5 minutes, I will be introducing myself, and then the next session I will be talking about pre-COVID and post-COVID situation in New Zealand property market. So so as you can see, I'm currently working as a senior lecturer, and also recently I've been awarded assigned another position to work for the real estate analysis unit, which is one of the main unit in Massey University property discipline. And I'm teaching property related subjects here in Massey University School of Economics and Finance. And I moved here in New Zealand in 2018, October. And I was previously living and working in Hong Kong. And we have I mean, 2.5 years old daughter. And basically, I'm from Pakistan. I'm from district Nankana Sahib. It's like 45 kilometer from Lahore. It's Mandi Faizabad. It's a small town in district Nankana Sahib. I had my undergrad and MBA from Pakistan, and then I worked there in a microfinance institute for a few years. Then I went to Sweden, and I had 2 master degrees from there. After completing those master degrees, I went to Hong Kong to complete my PhD in construction and property management. And in Hong Kong, I work in Hong Kong Polytechnic University and University of Hong Kong as a postdoctoral research fellow for a number of public and private sector projects. And after completing my postdoc over there, I got an opportunity to join Massey University, and I'm here like for last 18 months. I'm teaching 2 undergraduate level courses here in Massey University. That's all from my side at the moment.
Okay, well, thank you, Dr. Dr. Arshad Javed, and I think it's your experience about in Hong Kong and New Zealand is really, really useful, because especially I know in Hong Kong, the housing and property development led economic development, actually they did in the past. I mean, especially from 1780s and 90s, actually, how they build the housing, mass housing for their community as well. And that will bring a lot of, economic growth and productivity in these sectors. So thank you very much for introducing yourself and some of your research trajectory. And I can see that Dr. Abdul Malik, the High Commissioner in Wellington, of Pakistan High Commissioner in Wellington, is here, and I welcome Dr. Malik, and I have to acknowledge his contribution actually for setting up this New Zealand Pakistan Research Forum as well, and holding our first meeting actually in the High Commission. Thank you very much, and welcome, Dr.
Thank you. Can you hear me, please? Thank you so much. It's again a great pleasure, Dr. Imran, that you have taken another initiative holding these conferences now through webinar. I think that's an important initiative taken. At least you will provide the opportunity to all the researchers and all the fellows to at least join once in a month, probably twice in a month. That is a great idea, and I fully endorse and appreciate it. And the topic chosen today is also of great significance, the economic impact of COVID-19. And probably, I think the discussion on this topic will be very useful, and we will have some idea how the countries like New Zealand, they have been impacted by this pandemic, and what are the lessons to learn for countries like Pakistan. And I deeply appreciate that the topic chosen today is very current and very much relevant for today's event. And once again, thank you so much. I don't want to waste all of your time, because I know all of you are very much committed, and you have taken your time out to discuss this important issue. And I hope and pray that some useful ideas will emerge from this discussion today. And I wish you all the success for today's event. Thank you so much for having me. Maybe I'll have to leave early, but as long as I can stay, and I will be able to learn something from this topic. Thank you so much, Dr. Imran.
Thank you very much, Dr. Malik, actually, for joining here about this discussion series and your continuous support actually for this initiative. And again, our one of the main aim is actually to showcase, I mean, very quality research actually is producing by the Pakistani origin researcher here in New Zealand. So thank you very much for joining here. And now today, our second speaker is Dr. Tahir Suleman. Dr. Tahir Suleman is a lecturer at Department of Accounting and Finance, University of Otago. He worked at Lincoln University and Victoria University, Wellington, prior joining to Otago University. So Tahir, I'm going to hand over to you.
Thank you, Dr. Imran. Let me share my screen first. So you already explained about me. So I came to New Zealand in 2012, most probably I think at the end of the 2012. Before that, I did my master's from Sweden. Arshad was like my class fellow there. So we spent like 1.5 years there, and then I moved to Finland to do another master in quantitative finance from Finland, and then I got scholarship in Victoria University, and I moved there in 2012, and I did my PhD from there, and then worked there as a researcher. And after that, as you said, I moved to Lincoln, and finally, I think like right at the end of the New Zealand. So we are sitting at the different parts of the New Zealand. So it's more kind of the cold place as compared to Palmerston North and Hamilton. So my main research is focused on the political risk and political uncertainty, and its impact on the financial markets. Like what I can say, like if I start, let me see. Yes. So like if we talk about some of the Twitter account sentiments, there are a lot of going on between China and USA, and you see whenever Donald Trump say anything or he tweet on his Twitter accounts, there is impact on the stock markets, like his tweets about imposing tariffs on Chinese markets actually results in the drop of S&P 500 and Dow Jones by 4 and 3%. And similarly, it also impacted the Chinese stock market by 5.6%. So over the past years, what I actually look at that, what is the political risk and how it influenced the financial markets. And then I also link the political risk with commodity markets like oil, gold, and all other precious metal commodity market. I look at the global political uncertainty, like arising like from Iraq-Iran war, invasion of Russia into Crimea, the Syria war, on the exchange rate of these countries. And I am also looking at impact of political risk on corporate social responsibility, as well as the financial market connectedness. That's what I did over the past, and now currently I am working on political risk and its impact on cash holdings. I am working on sustainable finance. Either it's good to put like some of the green bonds, because they are more kind of the sustainable kind of investment, as well as I am looking at Islamic finance, because these are ethical based financing, and people think if you are investing your money in these kind of investment, they can be considered as a safe haven. So that's what I am currently working on. So as Arshad said, I will talk about later on the COVID-19 impact on the stock market later on.
Well, thank you very much, Tahir. And I think it's a very interesting research you're on financial market, and thanks for mentioning the US president, I mean, the tweets as well. And because in the past, the policy documents, I mean, took a little bit longer time actually to impact on the financial market, but the tweets, because my own research actually on Shenzhen and Hong Kong property market, that just only one tweets actually have so much impact on on all this, I mean, financial and property market of Shenzhen and Hong Kong because of the US and China kind of a trade, kind of a challenges. And another thing is, I think, which is very interesting you mentioned, and that's very relevant to, I mean, New Zealand and also the Pakistan as well, about the political stability and instability, and that link with the financial market as well. This is really, really important, because I know in the past, especially how the relationship in New Zealand and in Australia, it's happened, because in Australia, the political instability was there, and then the New Zealand actually got a bit more stability and economic growth. So, well, thank you. Thank you very much for that. And now our third speaker is Dr. Mubashir Qasim. And Dr. Qasim is scientist at the Research and Development Department of Livestock Improvement Corporation. And Dr. Qasim worked at Waikato University in Hamilton. So I'm handing over to you, Dr. Mubashir. You have to.
I think Mubashir didn't switch on his mic.
You can guys hear me?
Yes.
Yep.
All right. Yeah, thank you, Dr. Imran, for your introduction. So for last 7 years, I've been working on sustaining intergenerational well-being. So basically, this is a field of economics which combines two interdisciplinary, interlinked, and multi-dimensional sustainability and well-being from very economic perspective. This is a bit complex in nature because of the multi-dimensionality involved in both of these subject matters. So I'll quickly introduce my subject matter, and then I'll move on to the introduction of my work, which I've done. And then in the later part of this panel discussion, I'll talk about the post-COVID world. All right, so the main aim of all governments' development endeavors is to achieve the minimum acceptable quality of life for everyone without going past the carrying capacity of nature, without destroying the environment, or without causing the irreversible damages to the nature. And internationally, we want to achieve the minimum acceptable standards of living for everyone on the planet Earth without going past the planetary boundaries, or without hitting the tipping points, irreversible tipping points. So the researchers have used a funnel metaphors to illustrate the relationship between sustainability and well-being. So with the rise of population demand for ecosystem services to support essential life functions such as climate regulation, water filtration, soil regeneration are increasing, whereas the Earth's capacity to provide these services on decline due to rise in population. So for example, there are fewer fish and forests than they were available a century ago. So this is one side of the problem. And the other side is the rate at which we consume resources to produce products and services to consume, like mass consumption drive coming through media, marketing, and all that. It's putting unprecedented pressure on the planet to generate, to provide those resources, and then to assimilate unprecedented burdens of waste coming through mass consumption. So metaphorically, it's like the society is passing through a funnel of declining opportunities, and the pressure is increasing over time, and we have less and less margin to maneuver as we move forward. And the complexity of the problem is we would need about 5 Earth-like planets if everybody lives like an average American. So this is a picture coming from a global ecological footprint network from 2018. So now I think this number has gone to 5.6 or 5.7. So that's quite huge. Actually, the Earth cannot provide the amount of resources we need to live the lifestyle we are living today, right? And if we take the world average, we would still need like 1.7 Earth-like planets. And when we talk about this problem with the policymakers, they say economic growth is basically the one and only solution for all economic problems. So the argument of my work is, it's not basically, it's not. We cannot continue to grow forever. There has to be limit to growth. And the supporting argument is global GDP has gone about 7 times from 11 trillion in 1960s to 80 trillion in 2018. There are still 800 people, over 800 million people hungry on the planet. Another 2 billion suffering from malnutrition and deficiencies. So the thing we fundamentally care about historically, so for example, environmental quality, equality, they're not coming along the growth rates. It's not really the growth which we need, but policymakers tend to disagree. So here I have few examples. So for example, Barack Obama in 2010, he said like, we need long-term lasting growth. David Cameron in 2011, he needs balanced growth. Angela Merkel in 2017, she voted for sustainable growth. And Jose Manuel, he wanted smart, sustainable, and inclusive growth for EU. I think that was also in 2017. The question is, do we really need growth? Of course not. I mean, like one of the common sustainable development definitions is the development which meets the needs of present generation without compromising the ability of future generations to meet their own needs. So if we grow too much, if we consume too much resources, definitely we are compromising the ability of future generations to meet their needs. So it's all about keeping the balance of well-being or welfare or products or services available over the long run, intergenerationally. So one generation is not worse off at the expense of the other one. So that's basically my whole work. So as opposed to GDP, which is basically how much goods and services produced in an economy in a year, regardless where the GDP is coming from, no matter it's coming from wars or selling weapons or destroying forests. I've been working on the genuine savings approach, which is a kind of comprehensive wealth measure. And wealth can be passed on to next generation, on generation for a very long time. So when I talk about wealth, it includes financial capital, natural capital, human capital, produced capital, and it also adjusts for pollution and waste we produced over the life cycle of consumption. So that has been my work. We extended the genuine saving measures, which has been around since 1970s. Estimates are made by World Bank every year. So the problem with the World Bank estimates are to maintain the comparability, they drop several significant variables. So for example, for New Zealand, forestry is very significant. So forestry is contributing to our GDP quite a lot. And plus it's also cleaning our environment and reducing the pollution levels low. So, but forestry has been excluded from World Bank genuine saving estimates. We did that. We developed a time series data for genuine savings for about 70 years. And our work contributed quite a lot to Living Standards Framework by New Zealand Treasury. We started working on New Zealand Treasury's Living Standard Framework in 2015, and we finished that around 2019. And that resulted in the well-being budget last year, 2019. So basically what we are trying to do is we are trying to convince government to move away from flows of income towards stocks of wealth, and then make policies to ensure that we increase these stocks of wealth over time, or at least we maintain it to ensure the long-term sustainability. But unfortunately, that has not been the case. New Zealand population is, I think, growing at the highest rate in OECD countries, which is 1.38. And our wealth generation is not catching up. So this, we are falling, we are having a shortfall of a bit of savings gap. So which means is like wealth per capita is slightly on decline. It's not as bad as many other countries, but still we have some wealth gap in there.
Well,
so that's pretty much my work.
Yeah, Mubashir, the work is really interesting and very close to my own heart as well, because I know, especially in case of Pakistan, that I believe Pakistan should be on the forefront to this climate change challenges and intergenerational sustainability, because we are really, really vulnerable actually,
Exactly.
because on this issues. And we have a huge population as well, and it's a time actually to think and rethink actually to bit more on a green economy or a ethical based kind of a development. And probably I think I would like to share one example in my own field actually, that just a few years ago, actually, I find out one professor, that's Patrick Geddes, actually, the Professor Patrick Geddes, who was originally biologist and then environmentalist, and then he came to in India in 1900, early 1900, by the British colonial government invited him, and he worked on Lahore as well, 17 different cities in South Asia, including Lahore, and he produced a report on economic growth and development and planning in Lahore in 1917. I get a chance to find that report and to in British Library in London and Melbourne University Archive as well. And it's very, very interesting that he mentioned at that time that the cities should provide an opportunity to reduce their intergenerational kind of a poverty. So development should be like that. And so almost 100 years ago, and in our cities, he was talking about that. And of course, British colonial government don't like his view, and then he didn't get the next work, and then he joined the university in Mumbai as well. But his work was very interesting, and I find it that in our own area, somebody was talking about 1917, about intergenerational growth and well-being. And again, the New Zealand is quite interesting case study as well, where they are talking about well-being budget, actually, that a bit more inclusive growth, actually taking everybody on board. And I think we really need it in New Zealand. We really need it in Pakistan. So thank you very much for sharing your wonderful research. And I'm going back to Dr. Arshad, that what kind of thoughts are going on in your discipline about the post-COVID world property market? Because I know that many people was really interested to listen some thoughts on property development and thoughts on post-COVID situation.
Yeah, actually, like I did not talk much about my research, but I will just be sharing a couple of things to you as well. Like, because I was having a multidisciplinary background and having accounting and finance, and then construction management, property management, and economics and finance types of things. So I mean, like these are a few things which are a kind of, as an early career researcher, you need to kind of market yourself. So I just prepare a few of these slides, and I got an opportunity to head this real estate analysis unit, and we are producing home affordability and rental reports for New Zealand, and I've been heading this unit for last 1 year. So and it has given me an opportunity to highlight some of the issues in the housing affordability and also the rental market. So sorry, by looking at this, and especially that because this I was not I may not having like enough time to talk about any other country, but just particularly New Zealand context. This is you can see this article was published on January 5th, 2020. So it was early, this was expected, like the property prices to be continue to grow within New Zealand. And sorry, the reason was like, the main reason was interest rate were quite low, and some of these the expat was returning from overseas, and the wages were also growing quite a bit. So this was a sentiment at that time, and like we can see this was a prediction at that time in January. And after sorry about this sore throat. So this is a report in March, once there was a lockdown was announced, and there was like a mortgage holiday and wage subsidy was announced by the government to just like to not to control this property market. So we can see this these initiatives from the government will be ending very soon in September. So we have to look at the impact in September or after the election as well. So you can see like the mortgage holiday was quite a good initiative from the government. There was a wage subsidy, there was low interest rate, and the government like injected cash into the economy to stabilize the overall, not only the property sector, but the other sectors as well. And this was an article I saw last night while I was preparing my PowerPoint slide. So you can see this, this is a kind of warning for New Zealand housing market. That could crash. I don't know what will happen, but these are the few things they mention about, because the wage subsidy will be finishing, and then the mortgage holiday will also be ending soon. So the impact of these two, especially things will be, we have to look at these things in especially in the next quarter. And here you can see another article which was on 25th of July. Sorry, so they were also talking about the mortgage holiday, wage subsidy. There's also a risk of a second wave, as we can see in Australia and in Victoria. So at the moment, I mean, the government is preparing for maybe smart lockdown type of things, or a level 3 or 4, which was announced by the Prime Minister. So we have to see what will happen after this second wave, in case that will be coming into New Zealand as well. And there's also an effect of net monthly migration. So, and also this trans-Tasman bubble have been dashed. So these are a few things which are still like have to see the impact of these on the property market. But for the last quarter, the report we published from February to May. So because of the lockdown, the property prices were gone down. But in June and July, we saw there is the property prices have risen quite significantly, like not only in Auckland and Wellington, but also we can see in almost the north as well. So, I mean, the impact of these things we will see in the next quarter, and the election also will be. We have to see which government will come into power and their policies. But one thing is quite interesting to see, like the year-old progressive home ownership scheme was announced. So, I mean, this is also a kind of good initiative, but I don't know whether it's a political type of thing or just like a kind of because the Kiwi built reset type of things were announced. So it's a kind of 23 million was announced for this scheme. So these are the things which the government is trying to tackle this property crash especially in New Zealand context.
Well, Arshad, this is very interesting, and I can fully understand that it's a very uncertain time. It's very hard to predict, and it's quite easy to be wrong as well at this moment, because initially, I mean, many experts predicted that the property prices will go down probably 20 to 25%. And we have seen that it was not the case, at least till September now in New Zealand. I wonder whether, do you know any other place, another city or another country where property market went down quite sharply? Probably Dubai, or I don't know.
Yeah, I mean, if I was just following Hong Kong, like there are different reasons for that one. And initially, like there was some protest, and the people were just moving from Hong Kong to overseas, and the property prices have gone down. But similarly, the case you can see in Dubai and in other parts of the world where the COVID-19 is still like the first wave is. They are unable to tackle that one, and we are quite lucky to have at least in a very controlled situation. So I mean, definitely the other countries are also the OECD and other countries are affected by this COVID-19.
Another thing you mentioned is very interesting, that expats are coming back to New Zealand, and I think it's a great opportunity for New Zealand to brain gain, in fact, actually, and so they can contribute financially and intellectually and professionally in this country, and I think that's great. And we wish, I mean, one day we will go back to Pakistan as well to contribute there. Thank you very much for that. And Dr. Tahir Suleman, I wonder that how this post-COVID situation is there in financial markets, probably, if you have some thoughts.
Thank you, Imran. Before I proceed with mine one, can I ask Arshad one question?
Yeah, sure.
Like everyone is talking about all this property market, and the statistic shows that there are more than 500,000 Kiwis living out of New Zealand. What will be the impact on property market if they start coming back?
Yes, it's a good question. Yes.
So is there anything the government or did you thought about that? Like not all people, may say 40% of that start coming that New Zealand is a safe place to live. Why should we live any other country?
Yeah, I mean, it's thanks for it's a. I heard like there are 1 million. I don't know. It's that my number is correct or not, but you are talking about 500,000. So it's a quite huge amount if we look at the annual migration, the average annual migration. That is also one of the factors which is affecting the property prices, although some of them they might not able to buy a house in New Zealand, but still like at the moment we can see the buyers and sellers sentiment is like there are some distressed sales, because of that one, the property prices have gone up like after this lockdown has been like the level 1 has been announced. So I mean, this the government announced this progressive home ownership scheme is a part of like their things to just tackle this housing crisis. So I mean, I don't know if there is any single bullet solution for that one. Is the people of like the 40% is quite big amount if you look at the so there will be like we can't build like the in Singapore they build in Hong Kong the high-rise building because of a lot of issues with high-rise in New Zealand especially. So I mean it's a
And another thing is because maybe here I will interrupt, adding some of my own professional dimension as well. Even we want to build like a Singapore and Hong Kong, the planning process will take quite a long time as well. Okay, because
Yes.
although I mean the government is always, all governments are trying to streamline the planning process, but generally it took quite a long time. And here I just want to say that Dr. Mubashir mentioned as well. And I mean, as a planner, we know that we are trying to protect the natural environment of New Zealand from all these growth as well. So trying our best to having a bit more environmental management and environmental thinking in planning rather than just only development. Okay, so Dr. Tahir.
Thank you, Imran. So let me start with some of the graphs. Mine was like not more kind of like stuff coming from the news. I have some graphs to show that how the financial markets actually reacted uh, to it. So if you look at this graph, it shows the how the financial market actually connected to each other. So if you look at the last one where it says X, this is the period during the COVID-19 period. And here is the J point is showing that when actually the COVID-19 started and no one is worried about, oh, it will gone, it is just a normal flu, it will not be affected. And suddenly after that, when there is a panic in the market, everyone start worrying about it. So you can see that how this volatility, the uncertainty in the stock market increased, and this is the highest one over the last, you can say, almost 14 or 15 year, which is during this COVID-19 period. So as I have put the data from 2016 to 20, so I didn't go too much back, but this is the highest one that we have during this period. And here is, we have the NZX 50 index for the New Zealand, and you can see it is like the lowest one in the history of New Zealand stock market. We have in New Zealand the biggest drop in stock market during 1987, the stock market crash when it dropped, but this is drop of, it's almost 8.5% drop in the index during COVID-19, but we are lucky, like we overcome this problem, and you can see it start going towards where it dropped. And I hope that in the coming period we will be again at the same point where we start losing our money. So I think it's too late for any investor who want to invest. But the best point is that when the stock market goes down, like here, if you purchase the share in the stock market, this is the point where you can hold it. But it is for the investors who can hold it for long term. If you are thinking about short term profits, there is no profit at the moment in the stock market. So if you think that you want to have your stocks for the longer term, then you can get some profits over next 6 to 8 months, because it take like economic recover with the time. Mubashir will talk more about economy, but it will take over a year to recover to the normal stage. Here is the stock index for Australia, which is more kind of our neighbors, and you can see their recovery is not as much as we have. They lost almost more than us, but their recovery is not as much as in New Zealand because still there are cases increasing, and you can see here is the point where they can be going upwards, but when there is a new cases coming in the different cities of Australia, it start decreasing again.
Well,
What else I have about Pakistan? So I thought it's good to make comparison of Pakistan, and I think Pakistan, we are like, we have lot of issues with the stock market. The government is doing different things. Investors are thinking differently. Before that, this COVID-19, we have a long history of terrorism in Pakistan, which actually impacted a lot of our financial institutions. But still, you can see that the KSE 100 index. This is the statistic of KSE 100 index. It dropped, but it slowly start recovering because, like, normally they, in Pakistan, they think that we don't have, like, if you look at the news, Facebook pages, you will find like a lot of people still think there is no such disease which called COVID-19. It just kind of the things people are just assuming. So in Pakistan, there was a big loss at this time, but the recovery is on the on it's going on. And then I compare it with the Islamic stocks because normally we say that Islamic stocks are more kind of the safe stocks as compared to other stocks because these are purchased or these are the stocks who people invest in these one on the basis of ethics. But still you can see it's dropped during COVID-19, but its recovery is more higher as compared to any other stocks. And it's only because that the people who invest in these kinds of stocks, they think that, oh, it's ethical issue to invest in these stocks. They are, in simple words, I can say, according to them, they say these are the halal stocks. I still have some, say, critics on them on their criteria of deciding Islamic and non-Islamic stocks, but still people purchase it because lot of top class muftis give their fatwa that these stocks are considered as Islamic. And you can see that loss is not as huge as you have in their other stocks.
well, yeah, that's very interesting. Very
Yeah,
interesting.
that because the people like they think, okay, we are purchasing it, so we should continue with those stocks. They are not selling it by this COVID-19 issue. And here is more kind of USA one, which has more kind of more impact as compared to other countries. So you can see that Dow Jones Index, it dropped by 5.3%. Then we have S&P 500, it dropped by 1.26%. But slowly you can see now the Nasdaq, it start increasing. Other indexes are also towards going upside. So we hope that in the coming periods these stocks will be going up. And most interestingly, regarding the stock market is that information is very important because in US stock market there are a lot of people who purchase the Zoom stocks, but actually that is not actually Zoom through which we are talking. So they think that technology stocks will go up because it's everything is locked down. No one can actually go to office. So there will be more kind of opportunity to invest in IT sector. So they thought this is Zoom. We should purchase it because everyone is doing online meeting and everything through Zoom. So you purchase it, but actually that is not the same Zoom which is we are using.
Thank you very much, Dr. Tahir. I think just because I'm looking at the time as well, and I think
Sure.
one of the key message I got from your presentation is the ethical stock actually is getting much more faster recovery, and I think that's a quite a nice way to transfer to the Dr. Mubashir as well because his intergenerational sustainability is talking about a bit more on ethics.
Yeah, and just last thing to add, I have also done some analysis on sustainable stocks like clean energy, green bonds, and they are performing also very well throughout this period.
Oh, well, that's great. That's great. Yes, Dr. Mubashir.
All right, so I have not prepared any slides for this part of my presentation. So I'll walk you through to the main concerns coming in the macroeconomics of a long-term intergenerational sustainability and well-being. So the main issues being talked about in my discipline these days is financial sustainability for the governments versus long-term well-being, probably for next 2 or 3 generations down the line in future. So Tahir showed the stock exchange indices, I mean like composite top 50, top 100 or top 20, and the companies are performing well. They are recovering from the shocks quite swiftly, I would say. It's not a slow recovery, it's a pretty fast recovery given the magnitude of the crises. So one of the reasons is a lot of companies are getting wage subsidies, bailout packages, support packages from the governments. That's why they are a kind of being insulated from the shocks by a third party. When it comes to the national well-being, the governments are trying to fund their welfare services, especially in welfare states like New Zealand, Finland, Canada. They're trying to fund their welfare services through public debts, issuing bonds, printing money, and number 2, from foreign debts. So these are 2 huge things. So governments might take a very long time to recover from this shock. So for example, in New Zealand, the current debt to GDP ratio is 62%. It's a huge number. So how are we going to repay these debt services? Particularly, I'm talking about the foreign debts, because New Zealand's government income mainly comes from taxes, direct and indirect taxes. Unlike Pakistan, we don't have many big state enterprises or foreign investments, so mainly taxes. And when we look at the long-term time horizon, our population growth or tax-paying bracket is shrinking gradually as compared to the population which is receiving benefits. School-going kids under 18 and retired people over 65. And with the better health services, the life expectancy is going up. So it means like there would be more people on the receiving end than the paying end. So if the trade deficit or the budget deficit sustains for a long time, then the economy exposes itself to more economic shocks, more external shocks. So that is the main risk in the field of macroeconomics when we talk about long-term well-being. So government spend a lot of money to do the wage subsidies. I heard the news the other day. It has gone up to 13 billion, which is a huge number, right?
That's very interesting, actually. Exactly, because how in New Zealand we will recover as well, you know. I think, and especially when the important sector of the tourism and, you know, that is really, really now is not contributing, in fact. No, thank you. Yeah, thank you very much for that. And I think I'm just looking at the time as well, but we have a few minutes to, if somebody have some questions. So Dr. Amir Mukhtar have some questions. So please, yeah. Can you unmute your microphone? Yep.
Yes, thank you very much. First of all, Assalamu alaikum to everyone. And it's a very nice talk that we are discussing a few different topics, and a very nice initiative by Dr. Imran. My question is to Dr. Arshad, because yeah, you showed some slides. I'm not economist, or I'm not a student of economics, but if you what do you think if you show that there is a cash flow in the market? And now let's come back to New Zealand, and let's predict that in September the Labour Party wins this election. What will be the implication of this cash flow in the market? Because do you think the prices will go high? like you have to do some predictions because your slides are few related with the New Zealand policies, and it's a, because for the general public it's very important to know. So
yeah, actually, I'm the previous. I mean, the work I'm doing currently, we are um, we are just preparing this home affordability or rental reports, which is like I'm just talking about the thing which the data I have, which can give you a picture like what was happened last quarter and what will happen. Like there are some sentiments from both buyers and seller perspective. So the things which I showed you, like I read an article last evening and they were talking about this sorry, September type of things. And I was not expecting that article to be published yesterday. And they were talking about, okay, the wage subsidy and mortgage holiday will be finishing in September. There is another factor about election and all these things, and that you can see the mortgage interest rate is already like the Reserve Bank already reduced it to I think it's 2.
yeah, that's right. What about the cash flow? The cash flow, how this cash flow will affect?
The cash flow definitely like this. The thing is, there will be more unemployment when there will be this wage subsidy will be, there will be no more wage subsidy. So the unemployment will affect definitely. There will be not cash flow with those people who will be unemployed. So I don't know they be able to survive few weeks or few months. So I mean these are a kind of sorry, the prediction which some of these like I don't know if I have shown you, like from the AFB they were talking about there. These are the things which will affect definitely. And the banks are offering some kind of uh, I can see the financial well-being and mental health program they have started to cope with these types of things with where the people will be unable to pay their mortgage. So I mean, we have to wait and see type of situation what will happen in September. And
Yeah, I
maybe
can fully understand that. I think it's a very, very extremely hard to predict actually. Uh, I can see the time from the clock on Dr. Malik office as well. It's a 1 o'clock. If somebody have any burning question, let me know. Otherwise, you can send me these questions and I will pass it through to the panelist as well.
yeah, I can just ask a question from Mubashir, because he was talking about the the sustainability and intergenerational. So we are having a billion tree program in Pakistan, and we are also having a billion tree program in New Zealand. So how you are going to, I mean, we saw there are some positive uh, like reports about our program in Pakistan, like we already achieved some of those sustainable development goals. So, I mean, if you can just shed a light on that program.
So how I compare the billion tree program
Like,
in these two countries?
not compare, we can't compare that one. Like it's not, because still here they are quite slow, and they will be achieving the target in New Zealand 2028, and in Pakistan definitely we are might be a bit of more ahead of the targets. I mean, how that will affect the overall the environment, and whether we are creating a soft image.
Probably. I don't know, Dr. Mubashir, but I just want to add one thing because I did some work that at Pakistan, they did a very great initiative. I think this is really, really good. However, we need to plan for the next 30 years if we really, really want to get something out of it. It's not just a 1 year kind of a program. It will go beyond one political party or one political government, and we really, really need a sustained commitment actually towards that billion trees program as well. So probably Dr. Mubashir, you might have some.
Yeah, the two countries are extremely different. And the same forestry program is serving different purposes for those two countries. In New Zealand, forestry is one of the major industry. It's going to be, I think, the largest exporter in next couple of years. That's what the New Industry Association tells. It's not only the environment or ecosystem services we are getting from the forestry, New Zealand forestry, it's also about GDP and the exports thingy. For Pakistan, I mean, the population is huge, and billion tree program would certainly increase the availability of ecosystem services per capita. But again, as Dr. Imran mentioned, it's nowhere near the end we want to achieve. It has to be sustained for a very long time to achieve the quality of air we want to achieve for everyone. So it's a good initiative, it's a very good start, but we need to keep doing it.
Okay. Yep, that's good. That's good. Thank you very much. Anybody else? That's up if you have some question, comment. Otherwise, really, I'm really thankful to all three panelists and the participant, and especially our guest, I mean, Dr. Abdul Malik from Pakistan High Commission. And I think, thank you very much for sparing your time and contributing. And please join me to say thank you for everybody and the panelists, and see you then next month, sorry. Okay. Thank you.
Thank you
very
much.
much.
Thank you.
All right.
Thank you. Thank you.
Bye.
Bye.